Accenture raising its full-year forecast, citing its AI services demand. The company beating on the top and bottom lines, but shares are falling. They're down 6%. Let's bring in CEO Julie Sweet to discuss what she's seeing on the ground. Julie, it's great to have you. Welcome back.
Thanks, Sarah. Good to be here.
So what actually is changing in terms of tech spending? Raise the forecast, but I think investors are also worried about DOGE cuts and other things.
Well, the best way that we can serve our investors is to deliver another strong quarter like we just announced with 8.5% growth. We took market share. We had 32 clients with $100 million of bookings or more, and we took the bottom off our range. And so we are executing the strategy that reflects what governments and the private sector need to do, which is reinvent using tech, data, and AI. And of course, another milestone quarter. In our first half, we had $1.1 billion of revenue from Gen AI, which is more than our entire fiscal year 24. That's what's happening on the ground. Reinvention, new ways of working, tech, data, and AI, and we're the partner of choice.
What about in the federal business, given the Department of Government efficiency cuts and targeting, I think, firms like yours? How much do you expect?
Well, I think one of the things I get a lot of questions is what do you do for the federal government, which I think really sets the table for what we think the opportunity is. So, for example, we are helping modernize the GI Bill. Our technologists digitize the GI Bill, so we're getting veterans their benefits faster, right? We're modernizing the supply chain for our war fighters. So we're a company of technologists who believe that there's a lot of opportunity to modernize, consolidate, and reinvent the federal government, which is the exact agenda of the new administration. And what we're seeing right now is as the new administration comes in and they're getting the balance of initial cost cutting and setting their broader priorities, we're seeing an impact on our business. But we're very unique in the federal market because federal is 8% of our business, and we bring the experience of 92% of our business, helping primarily the private sector reinvent. We bring those commercial solutions to the federal government. So we feel really well positioned to help the federal government achieve their agenda, which is our mission, right? We are the partners of the federal government.
Understood. So are you making that case in Washington that you can actually help with some of the initiatives that they're trying to do by making the government more efficient, or is it just cut, cut, cut? I mean, today, the president, for instance, signed an EO to wind down the Department of Education. Not clear whether he's going to be able to do that, but things like that, how would that affect you?
Sarah, how I would say is our mission is to be the partner. So we're working with our clients at the agencies to help them achieve their goals. And their goals, as set by this administration, are to achieve more efficiency through modernization, reinvention, and consolidation. And so, of course, that's what we're working with them on. And that has an impact right now. And as I said, we really see our work, which is tangible outcomes. We have a lot of experience. One agency, for example, we delivered $500 million in savings over the last couple of years. So we're taking all of that experience and working. And of course, it's quite early days as we're helping the administration and working with them to achieve their goals.
Julie, your stock's off the lows, but it was on the call when you did say what obviously Sarah's been asking you about as well. I think you said many new procurement actions have slowed, which is negatively impacting your sales and revenue. To that point, I think you made the point, 8% of global revenue and 16% of America's revenue relies on those federal contracts, so to speak. So is it your expectation that a lot of these new procurement actions that have slowed will be reinstated at some point? How do you see this going?
Well, David, first of all, as you kind of step back and look at our business, right, our job is to be agile and to perform across, across market cycles. And that's why, against all of this backdrop, it was pretty exciting to be able to say to the street that we're going to deliver 5 to 7% for the first fiscal year. We took the bottom off of our range. And so we feel very, very confident in where our business is going. And that is also true with respect to our ability to help the federal government. And of course, as you look across the pond, you're also seeing the importance of the diversification of our business. In Europe, we've had announcements of significant government spending. And as I've talked about on this show or in prior quarters, we've been investing in Europe in our public sector, which allows us to be also positioned. And so, one of the things, I'm talking to CEOs every day. And, if you think about the broader environment over the last several years, there's lots of developments. And what our CEOs and our clients are saying is exactly what we say, which is we need to deliver growth regardless of the cycle. And that's why they're turning to us. And that's where our resilient business model, diversification, and where the markets, the industries, the types of work are having us deliver a very strong year at 5 to 7% growth.